Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Now, markets, they have come off the day's highest point, actually trading in the red. Do not forget, last week was a very good week for the markets, right? We did see that run-up coming in, and today we're seeing a decline coming in for the markets. So Nifty 50 as of now is trading at the day's lowest point. Let's pull up the Nifty Bank as well, because that also is seeing a bit of a subdued performance. So that will be something that we'll be watching out for. Nifty Bank is also down in today's trading session. 0.2% of decline. I want to see what's the broader end of the market doing. Is it managing to perform better than the benchmark indices? Nifty Midcap was managing to hold on to some bit of a green. So yes, Nifty Midcap as of now also is holding on to those morning sort of gains that we've seen. 0.4% of gain for the Nifty Midcap. Small cap, some bit of a decline has come in the last 1 hour or so. 0.3% of gain is still what the broader end of the market is managing to hold on to. So surely broader markets doing better than the benchmark indices, what we're watching out for. FMCG, metals, autos among the top sectoral losers. But this is a show where we solve all your stock-related queries, and to do just that, today we have our experts joining with us, Somil, Mehta, head of alternate research, capital market, Mirae Asset, Sharekhan, as well as Gaurang, Shah, senior vice president at Geojit Financial Services, to answer all the stock-related queries. Somil, before we get started, a bit of a decline coming in for the markets right today, but given the run-up that we've seen last week, is this just a bit of a tiny blip? And again, it's going to be around this range now.
Hi, good afternoon to everyone. It's just a pause. I think we've seen a 1,000-point rally in the last 7 to 8 trading sessions. So I think it is just a pause. It's a very healthy pause, and I absolutely think that this is a buying opportunity. There are sectors which are doing really well. For Nifty, I think 25,400 would be the first support, and the second support would be around 25,300. So this is a small support zone for Nifty, and I think this will be a very good buying opportunity. On the upside, I'll be expecting 25,900 in the very short term, and the medium term outlook, I think all-time highs would be retested very soon. So buy on decline should be the strategy, and absolutely stay focused on sector specific. Right now, PSU banks are really doing good. Mid caps are doing good. So a sector specific should be the focus.
Sector specific should be the focus, and buying should be dips should be taken as a buying opportunity is the word coming in right now for the markets. But let's get started with the stock related queries. The first query for today is coming from Aniket, who's writing to us from Navi Mumbai. He's holding 96 shares of Anand Raj. This is at a price of 505 rupees per share. Wants to know the long term as well as the short-term outlook for Anand Raj. Gaurang, good afternoon. What's your view coming in for Anand Raj, both long-term as well as short-term?
Thank you so much for having me on the show. Good afternoon to you and to everyone. Unfortunately, we don't have coverage on Anand Raj. I won't be able to give you any specifics. Sorry for this.
Okay. It's okay. Anand Raj, on the technical front then, Somil, what are we watching out for? Last 6 months has seen a decline coming in. Right now, the viewer is not making any sort of that much of a loss or anything. But is it a bit of a worry given that there was a bit of a declining trend coming in?
Overall, if you see, Anand Raj was in a very good long-term uptrend. And in the last 6 months, we've seen a good correction from the highs of 940, and the lows we've seen is 390. Very good correction, healthy correction. A small inverted head and shoulder pattern has broken on the upside. So I think I'm very positive in the medium-term outlook, in the very short term as well, because right now it is just trading about 200 daily exponential moving average, and it is being tested by 20 and 40 daily as well. So I think from here, support would be 533. That can be a stop loss as well for a positional call. And on the upside, 730 would be my target in the medium term outlook. Even in the short term, I think I'm positive, and it will be around 630. Targets would be around 630.
Okay, keeping an eye out on those levels for Anand Raj on the technical front. Let's move on to the next query. Afcon's Infra. Padma is writing to us from Andhra Pradesh. She's holding 32 shares of Afcon Infrastructure for 63 rupees as a buying price, currently making some bit of a loss here. She's saying, should she continue to hold this for 2 more years, and wants to know the prospects of the stock. Gaurang, your view coming in for Afcon Infrastructure. obviously fairly recent listing, right? November 2024. So what are we watching out for here?
So, Vinny, before I say that, all recommendations are part of our fundamental research team. My company, our company, Geojit, or I do not have any personal investments or any other financial interest or any conflict of interest. But we give similar recommendations to our clients. They might have their investment position. As far as Afcon Infra is concerned, I don't recollect even having a IPO note on this. But as a sectorial theme, Vinny, our sense is that this sector is going to do well because of the kind of spending that the government is doing, both at center and state level. Some of the companies that we have coverage in the infra space is NCC Limited and HG Infra and Engineering. PNC Infra is the third one where we have a coverage. So the sector looks good.
Okay, sector overall is good, and you've mentioned some of these other names that are there as well. Your view coming in on the technical front, Somil, Afcon, I know there's not much charts here, but anything that you have seen?
At this point of time, it has been struggling. The stock has been struggling below 200 daily exponential moving average. So I don't see anything positive in the medium term outlook. Even in the short term, there's a triangle, a bearish triangle formation here, and I think it will be broken on the downside. The previous lows would be retested around 400 levels. So maybe that would be the right time to revisit the stock again. But however, overall infra space looks good. IRB infra, GMR, all of them look good. But this stock, especially medium term, negative, short term negative.
Medium and short term is a negative view coming in right now, given that there's a bit of a downtrend that's going on here. But sector-wise, both on the fundamental and the technical front, it's a thumbs up coming in for the infrastructure. There are infrastructure sector. There are other names that our experts mentioned as well. Let's move on to the next query for today. We have Bharti Dave, who's writing to us from Gujarat. She's holding 40 shares of Nestle India. Price is 2,640 rupees per share. Wants to know the 3-year horizon on the stock. Is it a good deal to continue to hold such a big FMCG name? What's your view coming in on this one, Gaurang? Nestle India, should you be continuing to hold this? Or, maybe look at some of these other names that are coming in here?
Well, I honestly, Vinny, I think big names are all the more reason why you should hold on to the FMCG segment. And primarily because, Vinny, we've seen good spread of monsoon. And for the FMCG sector, traction in terms of demand from semi-urban and rural India is going to be the driving force as far as the top line volume growth, as we call it, is concerned. And if you have a decent volume growth, but by default, you have a positive impact on your profitability and net bottom line. So we have a whole recommendation on Nestle India from a long-term point of view.
Okay, hold recommendation coming in for Nestle India on the fundamental front. On the technicals, Somil, what are we watching out for? Last 1 year, stock is, it just remained in that range. Not much of a uptick, downtick that we're seeing here. So now what should we watch out for? 3-year time period is what the viewers were willing to hold on for.
Nestle has had a good correction in the last couple of years, I think. And now there was a basing out pattern in the last 3 to 4 months. This basing out pattern has broken on the upside. So I'm very positive on the stock now. I think the previous swing highs would be retested. 2770, 2780 would be my targets for the medium term outlook. In the very short term, there is a flag pattern forming just above the 200 daily exponential moving average, which is a good sign for the stock. Support should be around 2346. That will be the stop loss in the medium term outlook, and the target should be 2770.
Okay, keep an eye out on those levels over there for Nestle India. Next query for today is coming from Shishil Kamble, who's writing to us from Noida, holding 3,600 shares of RECC at 400 rupees per share and 4,000 shares of PFC, and this is at a price of 430 rupees per share. So obviously it's around the buy price, right now, the stock as well. Wants to know the future prospect of RECC as well as PFC. Gaurang, your view coming in. Dividend surely come in, but both these as a pair, should they continue to hold both of them for the long term?
Vinny, I think they were star performers, 23, 24. And the entire transmission, distribution, power project finance looks very, very positive in terms of whatever government has lined up in the next 3 to 5 years, whether it is conventional hydropower or whether it is to do with the new clean and green energy. We used to have coverage on PFC and REC some time back, but currently we don't have. One company that we cover in this space is Power Grid, which has almost about 70-75% of grid transmission network pan-India. So the sector is looking extremely promising. I think given the past performance, possibly the stocks are trading in some narrow range. Won't be able to give specific buy, sell and hold since we don't have a coverage on PFC and RECC. Winning.
Okay. View coming in on the sector over there from Gaurang. Somil, your view, PFC and REC, what should we be doing with both these stocks? Should they continue to hold this? Should they look to now sell this, both these, and, because it's around the buy price, or look to add some more? What would your suggestion be?
I think let's start with REC. REC is very range bound, extremely range bound, struggling to go about 200 daily exponential moving average. I think I will still expect this stock to keep consolidating within the range of 380 and 431. Once it closes above 431, I think that will be the right time to buy again. Or maybe you can hold as well because the medium-term outlook does not look very negative. So on the downside, 380 would be a very strong support. And on the upside, once it breaks out of this range, the next target would be around 500 levels in the medium-term outlook for REC. So hold for REC. For PFC, again, PFC is forming a triangle pattern, and this triangle pattern has, I'm expecting this to break on the upside. Definitely positive in the short term, in the medium term outlook, both. The stop loss would be around 410, very good risk reward ratio at this point of time. The targets would be around 475.
Okay, keep an eye out on those levels over there for PFC and REC. But on that note, we are going to actually slip into a very short break. But viewers, remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back to Your Stocks on CNBC TV18. This is a show where we solve all your stock-related queries. And keeping it going with that, we have our expert Somil Mehta as well as Gaurang Shah, who are still with us. Let's move on to the next query, gentlemen. This is coming from Sai Babu, who's writing to us from Vijayawada. He's holding 100 shares of Arti Industries. This is at a price of 700 rupees per share. He's been holding it for the last 4 years, now making considerable loss on this one. Other than that, he's also holding 100 shares of Indescent Bank. This is at a price of 1,240 rupees per share. Gaurang, your view coming in for Arti Industries as well as Indescent Bank. Now, obviously, Indescent Bank is inching closer to that finalizing the new CEO, giving those names coming in as well. Your thoughts on both these stocks? What should the viewer do? They're making a big loss on both these names. So should they continue to hold, wait for a recovery? Outlook?
Well, Vinny, I think he needs to put a strategy in place, to be very honest. Because when you're stuck in a stock for a long time at a level which is much, much over and above the current market price, if you have, first of all, investable amount, first of all, on both these stocks, on Arti, we have an accumulate. On Indescent Bank, we have a hold recommendation. Yes, whatever happened in the recent past with Indescent Bank was something which should not have happened. The management should have been proactive in letting the authorities and market know as to what went wrong with the derivative losses of 1,950 crores. However, everything said and done, post that 3 forensic audits have happened, I believe. And we are maintaining a whole stance. So first of all, hold on to it. Would be a very prudent thing to average some at lower levels. See, from the levels of the lows of Indescent Bank, it has come to almost about close to 875 or 900. Even Arti Industries have come up from the lows. So not at current levels, but when you get dips in the market, you need to average. And this strategy would definitely prove to be prudent because if you are a long-term investor, nothing is wrong. Yes, the stocks have corrected quite a bit because of the news flows and the numbers and the reported earnings. But long term, we remain positive on both. But you need to average at lower levels.
Okay, long term remain positive on both, but need to average at lower levels. That's the word coming in there on the fundamentals. On the technicals, Somil, what are we watching out for? Now, obviously, we had those issues that came in for Indescent Bank, that sharp drop came in, and then we've seen some bit of that comeback coming in for Indescent Bank. If things start easing off, everything falls into place. On the charts and technicals, Indescent Bank, how is that looking? And Arti Industries, last 1 year specifically, it's down 32%. Is this a time maybe to, add some bit more, given that their buying price is high? And what would you also concur with Gaurang?
I think Arti Industries looks good to me in the medium term outlook. However, the buying price should be only above 495, which is a multiple resistance zone for the stock. This stock has been taking resistance around those levels for a little while now. Once it goes above 495, it'll be a great stock to hold on to. And 594, 595 would be the next target in the medium term outlook. On the downside, Arti Industry does not look like it will correct very sharply. Very strong support around 410, 418 levels. So that will be a strong level to go in and probably buy again. But yes, good stock in the medium term outlook, positive for Arti, not in the short term. For Indescent Bank has been struggling to go about 200 daily exponential moving average for a very long time. It has been trading about 20 and 40 daily moving average, which is great, and it has just broken out of a small flag pattern. So bullish in the very short term. Targets would be around 960, 965 levels for short term. But in the medium term outlook, Indescent Bank does not look good to me. It will probably start looking good only about 200 daily exponential moving average, which is above 965, 970 levels.
Okay, so short-term targets are given for Indescent Bank. Arti Industries' medium-term outlook is positive. That's the word coming in from Somil. So keep an eye out on those levels over there that are mentioned by him as well for both Arti as well as Indescent Bank. Next query for today is coming from Manoj, who's writing to us from Hyderabad. He's holding 2,000 shares of Hind Copper, and this is at a price of 130 rupees per share. Obviously making a profit on this one right now. Wants to know if he can continue to hold the stock for a year more or exit at the current levels and book out the profits. Gaurang, your view for Hindustan Copper?
Well, so again, no specific coverage, but see, he's also asking for a switch, Vinny.
Yeah.
Something like an Hindalco would augur well in case if he's got a long-term time horizon. So it's a switch from Hindustan Copper to Hindalco. Subject to, of course, his view is to come out of it, then he can switch on to Hindalco from a long-term point of view.
Okay, that's the view coming in on the long-term front. They're making a profit, and if you're looking to switch, then you can look at Hindalco also, which is a better option for the long term, is Gaurang's view. Somil, your view coming in for Hind Copper. Should they actually move out of the stock or, continue to hold this for a time period of 1 year?
To hold the stock. This is my current favorite in the metals pack. Looks great to me. A small consolidation has broken on the upside. If you see the last 3 to 4 months, a small basing out pattern has also broken on the upside, which is on the weekly charts. The momentum indicators on the higher degree time frame are buy side and looking great. On the upside, I think the next target would be around 330 in the medium term outlook. So hold is my suggestion, and on the downside, 240 would be the stop loss, a very strong support zone.
Okay, keep an eye out over there for Hindustan Copper in terms of levels, stop loss as well. Next query for today is on coming from actually Sampath Kumar, who's writing to us from Telangana. He's holding 130 shares of Coal India. This is at a price of 433 rupees per share, making a loss on Coal India. The other one is 30 shares of Dabur. This is at a price of 554 rupees per share, making a loss here as well. So long-term view, Dabur and Coal India. Gaurang, what should they be doing? They're making a loss on this one. Coal India does have that dividend factor that comes into play, but does it make sense holding the stock now?
So, very dividend for public sector companies are kind of a little bit of silver lining. The reason why you invest in a stock is to get an appreciation on fallback of earning visibility management commentary, taking the business forward, etc., etc. On both these stocks, Coal India and Dabur, we have a hold on Coal India. Again, this year also, Vinny, the problem is getting invested at higher levels. But from a long-term point of view, if you have investable amount, maybe close to 360 or close to those levels, you can average Coal India. Dabur at current levels doesn't look bad at all to average, but definitely needs to average both to bring down the investment level from the higher levels to a lower level and continue to hold on from a long-term point of view.
Continue to hold on from the long-term point of view. Somil, your view coming in, because Dabur, when I'm looking at it also in terms of a move, last 6 months, it's just been on a downward trend. So is it time actually, better to just get out of the stock right now, look at some other FMCG name, or continue to hold Dabur? And Coal India also, what's your view?
Let's start with Coal India. Coal India, triangle pattern, struggling to go above a 200 daily exponential moving average. Very strong resistance around 412, 415. In the very short term, definitely negative on Coal India. In the medium term outlook, maybe the stock will take support around 360 levels and then again start the up move. But I will wait. I'll wait till the close above 415, 420 levels, and then probably the next target for Coal India would be much higher. But wait and watch would be my suggestion on Coal India. For Dabur, Dabur has been struggling same thing in the last 6 months. It's not been able to go above 20 and 40 daily moving average. It's been struggling. It goes up and then dips down again, breaks the previous swing lows. So not very positive on this stock. Nestle would be a great buy. Even Britannia looks good. Probably if you want to switch to Britannia or Nestle would be a good strategy.
Okay, Britannia or Nestle would be a good strategy in the FMCG pack. That's the word coming in from Somil. But that was the last query for today. So Somil as well as Gaurang, thank you so much for joining in with us as always. And viewers, thank you so much for sending us your queries. Keep sending us your queries. You can see the email ID that's flashing at the top of your screens for you all, and we'll solve them on Monday, Wednesdays and Fridays. But with that, we'll wind down this edition of Your Stocks today. Nifty almost near the day's lowest point as of now as well. Don't go anywhere. Up next, you have Closing Bell to take you through the last hour of trade.